The dollar hits a 7-month low ahead of the Jackson Hole meeting of central bankers. Welcome to Market Insight. I'm Ramzan Karmali. The euro this morning hit its highest level against the greenback since the end of December, and sterling rose above $1.30. They're not the only currencies enjoying a run against the US dollar, which hit a fresh 7-month low today. So what's behind this week's rout? Well, to help answer that and more, I'm joined by Fiona Cincotta, Senior Market Analyst at City Index. Fiona, thanks so much for joining us. So Fiona, what do you make of the recent weakness in the dollar? A lot of attention seems to be focused on events later this week at the Jackson Hole Economic Symposium. Are traders right to be so focused on this?
Yeah, I think, what we've seen here is bets building that the Federal Reserve is going to start cutting interest rates next month. I mean, we're sort of seeing more and more signs and signals that that's going to be the case. Obviously, inflation data has eased lower to a 3-year low. We saw inflation drop to 2.9%. And there are some signs of some weakness building in the US economy as well. Added to that, recent Fed speakers have also signaled that perhaps it's going to be appropriate to start discussing rate cuts. So I think, the signs are there. The market is fully pricing in a rate cut in September. Obviously, the expectation is for a 25 basis point rate cut. And there had been greater expectations for a 50 basis point rate cut, but that has been reined in as we've seen those recession fears ease. So I think there is a reason for the market to be focused on this, particularly the currency market. We know that obviously the US dollar had been trading relatively stronger compared to other currencies, where central banks have already started to cut interest rates. So I think what we're seeing now is that repricing, and that's seen the dollar fall to that 7-month low.
Well, you talk about central banks that have already started cutting. We know that the Bank of England Governor Andrew Bailey and the President of the ECB, Christine Lagarde, will also be in attendance. What do you think they will do next month when it comes to cutting rates? Do you think they'll join in?
Yeah, it's a really good question. I think if we just start with the Bank of England, obviously we've had the Bank of England make its first 25 basis point rate cut at the previous meeting. So I think expectations for another move probably seems a little bit premature. I think the Bank of England's going to want to see how that rate cut impacts the economy, what's the effect of that rate cut before it really considers cutting rates again. If we look at market expectations, the market's pricing in just a 20% probability of another rate cut from the Bank of England in September. We do really need to look out as far as November for the market to be fully pricing in another 25 basis point rate cut from the Bank of England. And that's helped lift the pound, especially against the US dollar. Now, as far as the ECB is concerned, I think there's a little bit more of a mixed picture here, because the ECB has been a little bit more cagey on whether it plans to cut interest rates again in September. In fact, they haven't pre-committed to anything. So I do think the September meeting will be very much a live meeting. As far as inflation is concerned, we did just see it tick up slightly in July to 2.6%, up from 2.5% in June, but it still remains close to that 2% level that the ECB is targeting. ECB policymakers have been a little bit more mixed in their commentary. We had Olli Rehn, who said that actually a September rate cut might be likely given the weaker economic outlook for the region. But the market's actually pricing in a 90% probability of a rate cut from the ECB in September. So that's quite high, suggesting that the ECB could be looking to move as well in September. Obviously, the euro has been capitalizing on that weakness in the US dollar. We saw it trade at 2024 highs yesterday. And so I think there could be a little bit of weakness in the euro to come if we do see a rate cut from the ECB.
Now let's turn to equity markets. It's a bit of a strange one, really, because the last few weeks it's been on a bit of a run. Do you think it's sustainable?
We have seen a really strong rally, particularly from that sell-off that we saw on the 5th of August. We've seen a really strong rebound as those recession fears in the US have eased. Obviously, that sell-off came following the week US non-farm payroll report. So I think that does mean that there's going to be a lot of focus on the next non-farm payroll report, because the market will want to just have some sort of more calmness regarding the outlook as far as the US labour market is concerned. I think we have had a good run. Obviously, pricing in there is those rate cuts from central banks, which is expected to increase liquidity, which is obviously beneficial for riskier assets as well. But I think we do need to now see a fresh catalyst to be able to take this rally higher. It does feel like it's slightly running out of steam, but maybe we'll get that from Federal Reserve Chair Jerome Powell if he speaks and adopts a more dovish tone at the Jackson Hole Symposium on Friday.
Now, just some quick UK corporate news now, and British Telecom shares are down really sharply today, and that's after rival Sky struck a deal with CityFibre to launch its broadband services. Could this move by Sky actually mean quite big trouble for BT?
Yeah, I think Sky was the third, or has been the third largest, it's the largest third-party ISP on BT's Openreach. So I think this move does actually just sort of highlight a weakness in the business model regarding BT's Openreach. And I think, this is going to potentially result in reduced revenue, in reduced dominance by Openreach, and increased competition, which I think is being read as bad news as far as investors are concerned. And that's really why we've seen the steep sell-off that we've seen today.
Fiona Cincotta from City Index, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.